Welcome back to the Dividend Diplomats YouTube channel. You got your favorite dividend investors out here, Bert and Lanny, the Dividend Diplomats, the best dividend channel here in all of social media, the 30,000 plus followers out there on X, the 20 plus thousand subscribers here on YouTube, guys. We are hitting across the channels here, bringing you dividend stocks, dividend news, and again, the Dividend Diplomats.
Forget those 3,000 subscribers on Threads too, everybody. We can't forget about them there.
Threads.
So yeah, everyone smash that subscribe button. Give this video a thumbs up. Let's keep going. This week, it's been a busy week from the Diplomats. On Monday, we talked about 3 stocks we were going to get from where they values ahead of earnings this week. Tuesday, we talked about Tyson Foods. So today, we're talking about another fantastic dividend growth stock.
Exactly, guys. This is a stock that I own very few shares of. This is a stock that has gone way up in a short period of time for me. I mean, it has gone way up. It has come back way down. It's actually come down about 32% from the 52-week high. And at the time, I was trying to exit small positions, but I actually held on to this one because I was noticing the trend within AI. It is a semi-tech company here, really in the storage space and the management of your data, that space. If you guys remember, I own a stock called NetApp, or ticker symbol NTAP, N-T-A-P. And their main business segments are, again, data-driven solutions, whether that's private data storage, AI, all that data, AI, they manage the AI data storage, the cloud, they manage that area of storage. So again, they're all about providing those services for many of the Fortune 500 companies. They've got some big clientele. And, they hit a 52-week high of $135.45. They've come down over 20% this year. And actually, they're down to $91.98. So they're actually down 32% from that 52-week high. And I'm either mad at myself for not just exiting. But at the time I was like, I don't know where this one's actually going to go. And so I was like, I'll just ride with it since it was such a small cost basis for me.
Yeah, and look, if you're going to place a bet on one, a small one that could see a meteoric rise, you're going to find the one that's in AI, that's in cloud, that when you just look at the pure numbers from their financial results here in this last quarterly earnings release, it was actually pretty solid. They revised revenue up. They had earnings per share guidance that was strong. Cloud revenue grew 15%. Gross margin in other areas grew in some up to as high as 76% in certain sectors. So gross margin was great too. It jumped up. There are a lot of reasons why you could be so positive about NetApp and why you would want to hold on to it. But it's just in this one instance, the public sentiment just kind of stopped for a second. And you can't really control that sometimes.
Yeah. And, when I first bought this stock, again, 5, 6, I don't know how many shares of it, I bought it at like $40 a share.
Yeah.
If that.
Yeah. So you're kind of playing with house money here, Lanny.
Yeah, it's all house money. So now that they've come down 32% from the 52-week high, I'm like, they've got a decent business model. They produce decent earnings. They've got solid cash flow, big clientele. They're in the area of popular polarized areas, AI, cloud storage solutions. Is it time for me to now exit? Do I, kind of like Bert's scenario from Tuesday's video, do I buy more now? Do I exit and just take my, I don't know, 100% plus gain? Do I, or just hold and see if it gets back to that 130 plus price point, exit then?
All right, so let's put a pin in that and let's run them through our screener and we can see what those metrics are. The DD stock screener is price to earnings ratio less than the S&P 500, dividend payout ratio less than 60%, history of increasing dividends, and that bonus metric, the dividend yield. Why don't we kick this party off, Lanny?
Let's kick this doggy style. Road Dog Jesse James DX. If you know, guys. Again, the stock is down 24% in the last month, down 21% this year. Price is now at $91.98. Management expects about $5.55 in earnings. Yahoo thinks way higher earnings. So I'm using management's expectations that they put out in their forward guidance. That leads to a price to earnings ratio of quote unquote just 17.
Yeah, still well below a lot of the other companies in the sector. Their dividend is $2.08. That gives you a payout ratio of 37.48% on this conservative earnings per share estimate that we use from management.
Yeah, safe payout ratio. They can continue to pay it, continue to grow it if they want. But that's where the kind of is interesting. They sometimes grew it every year, and then pandemic hit, and they're like, we'll grow it every few years. They've increased it probably twice in the last, I don't know, 6 years. So really 1 year of dividend growth the past year. So 2.3% on the dividend growth front.
Yeah, their yield is 2.26%, which is below their 5-year yield of 2.46%, which is crazy. Given how much it's fallen this year, that just shows you how much they've climbed up over the past, because they're still below that 5-year average yield.
Yeah, so that's where things get interesting. Again, they're down 21% this year, down 10% since last year. I think closing in on 49 billion in market cap. For NTAP. I think it's less than that. It's 19 billion in market cap.
Oh.
Now, the last 5 years, though, again, just to really put it in frame of reference, they're up about 154% in 5 years,
Exactly.
which probably speaks to kind of where I've owned it, I think, over that 5-year time period. Fortunately, unfortunately, because it would have been a lot better if I would have dumped it in the fall last year. But here I am, guys. I don't own that many shares. Again, call it a $400 or $500 position that I have now. At one point, it was, higher than that. I was sitting on a huge gain. Current ratio is actually below 1x, which is not where I like it. I like it above 1x. Bert and I both do. Taking in inventory, the quick ratio is actually great at 0.87 because we like at least a 0.5. So they don't hold on to too much inventory. So okay on the liquidity side, but I would have expected a higher liquidity mark.
Yeah, because what are they really investing? Like, what do they have holding up their cash that much? That is an interesting metric there.
Managing that cash, or they're trying to keep out.
Yeah, well, they gotta figure something out there if it's below.
I'll pay the bills for a little while.
Yeah, you got maybe 11 months in there to pay the bills out of a 0.93 current ratio.
Yeah, so that's the one interesting part there, Bert.
Yeah, that is interesting. So what's your gut telling you, Lanny? If you were gonna throw some grass up in the air and see which way the wind's blowing for NTAP, what would it be telling you right now?
Well, when they grow the dividend, it's never good. It's never like, oh man, they increased it like 20%. No, it's like they've increased it 5%, 6%, 4%. It's not like a big balmy dividend growth when they do. They don't yield that much now. Part of me, when I'm looking at this stock, not to say I'm going to need a couple more earnings releases this year, but it's more of like, okay, is the AI and all that stuff a fluke? Is it now going to be worse and worse? Is the economy spend worse and worse? Because I look at does VYM have better upside potential than NTAP?
I mean, upside potential, probably not. Like just pure appreciation upside potential of what could pop quickly, but more consistency, better dividend growth, absolutely VYM.
Yeah, and paying a better dividend. We're talking anywhere from 60 to 80 basis points higher, and plus the dividend growth is probably 500 to 600 points higher, or 400 to 600 points higher. That's where I'm at with it.
Tough. So let's take it out. Let's put it out to the community. What would you do if you were Lanny? What would you do with his NetApp position? Again, it's a smaller position. Would you let it ride, or would you move those funds into VYM? The same thing we were trying to solve for on Tuesday with Tyson, but with SCHD.
Let us know in the comments, guys. What would you do with a small position? Would you just let it ride because it's so small? Because there's going to be a lot of quicker, soon upside, and I can exit maybe in the $120 to $130 range? Or you think it's just pat myself on the back. I missed out on 30-something% gain that I just saw diminish and just walk away? Let me know in those comments, guys, below.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, you're either with us or you're against us, Jack.
That was Bertha Hurt and Laney from the gosh damn Dividend Diplomats. Over and out.